How dividend investing creates passive income. What if your investments paid you even when you weren't working? Imagine waking up, checking your account, and seeing money deposited without selling anything, without working extra hours, and without starting another side hustle. That is the idea behind dividend investing. Many people think the only way to make money from investing is to buy low and sell high. But there's another way. Some companies choose to share part of their profits with their shareholders. These payments are called dividends. If you own shares in those companies, you may receive regular dividend payments. Let's look at two people. Meet Michael and Daniel. Both invest $500 every month. Both remain disciplined for 20 years, but they take different approaches. Michael invests in companies that don't pay dividends. His investments grow over time, but if he wants money, he has to sell some of his shares. Daniel chooses to invest in quality dividend-paying companies. His investments also grow, but they do something else. They begin paying him regular income. At first, those dividend payments are small, maybe only a few dollars. Nothing that changes his life. But Daniel keeps investing. He doesn't spend the dividends. Instead, he reinvests every payment. Those dividends buy more shares. Those new shares produce even more dividends. Year after year, the cycle continues, slowly, then faster. 20 years later, Michael has built a valuable investment portfolio, but Daniel has something extra. His portfolio not only has value, it also produces income. Every month or every quarter, his investments continue paying him, whether he's working, traveling, or sleeping. This is one reason many long-term investors appreciate dividend investing. Their money isn't just growing, it's also creating cash flow. Of course, dividends are never guaranteed. Companies can reduce or even stop paying dividends, especially during difficult economic times, and focusing only on high dividend yields can sometimes lead investors into poor quality companies. That's why many experienced investors focus on businesses with strong financial health, consistent earnings, and a long history of paying dividends. The real power comes when dividends are reinvested. Each payment buys additional shares. Those shares generate more dividends, and over time, that creates a powerful compounding effect. Your investments begin producing income, and that income helps build even more income. The lesson is simple. Dividend investing doesn't make you rich overnight. It rewards patience, consistency, and long-term thinking. The goal isn't simply to own investments. The goal is to own investments that can continue working for you year after year. If you enjoyed this video, subscribe to Money Talks Explain TV for more simple lessons on saving, investing, and building long-term wealth.